Prices are up everywhere. Groceries, gas, rent. It feels like every time you check your bank account, the money just doesn't go as far. Sound familiar? That feeling of running faster just to stay in the same place, that's inflation. And it's quietly eating your money. For most people, this is a scary time. You watch the news, you feel a little uneasy. It feels like there's a war, a new one starting every single day, that it's just a really difficult time. And that can cause us to feel powerless. But what if I told you all of this chaos is actually an opportunity? While most people were panicking as prices went through the roof, I saw a signal. I used that chaos to build an inflation-proof empire with just 3 asset classes. In this video, I'm not just going to tell you what they are, I'm going to show you exactly how I use them to build a financial fortress for me and my clients, and how you can too. Let's be real for a second. The last few years have been a huge wake-up call. We saw just how fast the world can change. One minute, everything feels fine. The next, headlines are screaming about supply chains, energy costs, and the one word that terrifies every single saver. And that word is inflation. And inflation isn't really just some far-fetched idea. We're all well aware that inflation was at a 40-year high right after COVID. This is your grocery bill where you were able to buy a certain amount of items for $50 and all of a sudden those items were $60. Where you were able to buy a car for $10,000 and you found out that that car was $12,000. And you're buying the exact same items, but we have to spend more and more money to maintain the exact same lifestyle. And when the normal things cost more, it starts to push back some of the recreational things, where we have to push back that family vacation again because the flights and hotels, they cost a lot more than we were expecting. It's looking at the money that you work so hard to save and realizing it buys less and less every single day. Inflation is the thief in the night, stealing our future while we sleep. And what's the standard advice? It's cut your spending, cancel Netflix, stop buying lattes. And look, being smart with your money is good, but that advice is playing defense. It's a strategy of retreat. It's about surviving, not thriving. It makes us the victim, forced to shrink our life to fit that shrinking budget. I remember feeling the exact same helplessness. I was doing all the right things. I was saving money. I was investing some money as well, but it felt like I was running on the treadmill, that I wasn't actually able to get at the speed of growth that I needed to outpace inflation. And I realized playing defense wasn't going to build the future that I had wanted for me and my family. I had to go on offense. And that's not just something that I was feeling, it was something that my clients are feeling, where they're like, I am investing 10, 20% of my salary. I don't feel like I'm actually seeing my account balances going up in a way that matches the inflation that I'm dealing with. That as my expenses are going up, that I'm investing less, but my investments aren't going up to where the amount of money that I had, and I felt like this is going to be fine for retirement or at least some dream vacation and different things, where I'm sitting there and looking at the numbers, and the numbers now require me to have more money or at least a higher return if I'm going to maintain the dreams that I have set out. And so I had to go on offense. I had to stop seeing inflation as a threat and start seeing it as a signal telling me where the smart money had to go. Because in economics, everything is a trade-off. There is never a position where everyone is losing, just like there's never a position where everyone is winning. That the reality is, in the times of great economic catastrophe, there will be a company that just started and is going to have its best year ever. That during times of economic growth and prosperity, there will be a company that has its worst year ever and files for bankruptcy. That the circumstances do not define our lifestyle unless we allow them to. And so that's why the biggest change for me wasn't in my bank account, it was in my mindset, it was in my head. I had stopped doom scrolling the news and started studying economic history. And I learned that these periods of high inflation, while tough for most, are historically massive wealth creation events for people who are playing the game the right way. The number one rule is this: in an inflationary world, you don't want to hold cash. Cash loses value. You also don't want to be stuck in a fixed income, like a salary that gets a 2% raise when inflation is 5%. What you want to own are assets, specifically assets whose value and income rise with or even faster than inflation. We're now recognizing the patterns that there are economic seasons just like there are regular seasons. And I should be just as equally confident that after summer comes fall, and after fall comes winter, and after winter comes spring, as I am in the economic seasons. That low interest rates creates times of economic growth, and during times of economic growth, people tend to spend more money. And we don't see people spend less money until we reach the peak, because normally the Fed will start increasing interest rates so that we don't go into hyperinflation. And as the Fed increases interest rates, the economy slows down. And as the economy slows down, we recognize that we go into a recession. And then if you go into too deep of a recession, it becomes a depression. But the Fed will generally lower the interest rates before we go into a depression. And that is the seesaw that we go through. So we go from economic growth to a peak, to a recession, to a trough, back to economic growth. And there it just goes up and down and up and down. And so once that clicked for me, everything changed. The chaos wasn't chaos anymore. It was the reordering of the financial world. And I was going to be on the right side of it. I focused on 3 specific types of assets that don't just survive inflation, but actually thrive in it. And these 3 pillars became my financial fortress. All right, you see what I did there? The first pillar in our financial fortress is real estate. Now, I know what some of you are thinking. Real estate? I can't even afford a house. Just stick with me, because this is the most powerful and misunderstood inflation hedge there is. Historically, real estate is a rock star during inflationary times. Why, you ask? Well, I'm glad that you asked. 2 big reasons are appreciation and cash flow. As the cost to build new homes goes up, lumber, labor, land, it makes existing homes more valuable, right? Not too bad. That's appreciation. During periods of high inflation, property values have generally gone up. And if you look at the last inflationary time that we had, you saw that properties were selling for $100,000, $200,000, $300,000 over asking price. And while the first time it happened, we were like, oh, well, that person was a knucklehead. I don't know why they paid that much for that house in my neighborhood. But once it happened like the second or third time, be honest, you thought, oh, I guess that's what my house is worth. Maybe we should sell our house. Really, these are all very natural thoughts that we all go through, where at first we're like, these people are crazy. And then eventually we're like, maybe this is what the price just is. But the real magic is the cash flow that you get from rental properties. Your biggest expense as a landlord is the mortgage. If you can get a fixed rate loan, well, that payment is locked in for 30 years. It never, ever changes. But the rent you charge, that's not fixed. As inflation pushes up the cost of living, it also pushes up the market price to rent. So think about it. Your biggest expense stays frozen. It stays in the exact same place, while your income goes up year after year, tied to the very inflation that's crushing everyone else. You are literally paying off your fixed debt with future cheaper inflated dollars. It's a beautiful thing. For one of my clients, their first move was a small duplex in a neighborhood that was starting to get popular. It wasn't fancy, but the math worked. And some of you will decide to live in one half and then rent the other. For them, they were able to rent out both sides. Now, if you are someone that is living on one side and then you rent out the other side, that's called house hacking, right? Don't, I didn't name it, so don't judge me. But the tenant's rent covers almost the entire mortgage. And so for some of you, your housing costs can drop to nearly zero, or at least significantly less than what it is now, even though you added on the asset of a duplex. And that can free up a ton of income that you can save for your next deal, which is what they did. And now they have multiple real estate assets over the years, where they got one every 2 to 5 years. And the beauty is, within a year, market rents in that area went up 8%. And then your mortgage payment, as we mentioned, exactly the same. The next year, rents went up again. And this property wasn't just a home, it was a little inflation fighting machine. Now, this strategy's effectiveness can be impacted by local rules like rent control or rising property taxes, which can limit how much you can raise the rent or eat into your overall returns. But you don't need to buy a huge apartment complex building. You can start with a single family home, a duplex, or even investing passively through a real estate investment trust or REITs. REITs are basically stocks that own a bunch of properties, and they have historically performed really well during times of moderate to high inflation. The key is just getting in the game. Own something tangible, something that you can hold, because when paper money gets shaky, the real stuff holds its value. Now, real estate can give you a solid foundation, but it is a pretty slow game. To really hit the gas on building wealth, we need to add the engine. And that engine is the second asset, which is your own business. Think about a typical 9 to 5 job. Your income is fixed. You get a salary, and maybe if you're lucky, you'll get that 3% annual raise. When inflation is running high, as it was with a 40-year high, that actually ends up being a real money pay cut because we're losing purchasing power. You can't buy the same stuff that you used to buy. And if you do have to decrease your lifestyle, I think it's fair to say that that feels like I got a pay cut. It feels like I got a lower paying job because I can't buy the same things I used to be able to buy. And so a business owner has a superpower. They get to set their prices. Now, naturally, in a capitalistic society, the value is decided by the market. If the market is willing to pay it, then that is the price that you can charge. But as long as you have the value that's available in your product, then you are going to be able to raise the prices. And you would think of Jordans, where there are shoes out there that are literally 1/10 of the price as Jordans, and yet people are paying that price. That there are phones out there 1/10 of the price as an iPhone, and yet people are out there paying those prices. And so we recognize that if you have an item that is valuable to the market, then you are less worried about inflation. And so as a business owner, you get to set the prices. When the cost of your supplies go up, a business can raise its prices. When labor costs you more, you're able to increase your prices to protect your profit margins. When tariffs and other taxes and regulations make it a little more expensive for you to operate, you can pass those costs on to the consumer, assuming that, again, you have a valuable product where they still see the value at that new price. And so a business can adapt to the economy in a way that a salary employee just honestly has much more difficulty doing. And we haven't even talked about all the ways that you can write off a lot more expenses as a business owner. That as a business owner, you can write some meals off. You can write off some gas. That you can write off expenses when you travel, as long as it's for business purposes and conferences. And the list just keeps going. That you have a lot of advantages as a business owner to help you fight inflation. Now, naturally, that lends the question, well, what kind of business? And me, I'm in a service-based business, and I find that that's typically a great place to start. And the reason is because you don't have a lot of built-in expenses. That is not impossible for you to have a service-based business that just requires you to pay for a laptop, it requires you to pay for internet, and you're in the game. You're out there now. Naturally, there are more costs when it comes to having a service-based business, but depending on the type of service industry that you enter, that it's not impossible. Versus if I have to pay to have something created, then I have to store that item or I have to ship that item, especially if I have it made overseas in some other country, there's a lot more logistical issues that I have to pay for, and I have to pay all that before I even sell one item. But in a service-based business where you can sell the item and fulfill the item almost at the same time. And I've seen some where they will sell the item first with pre-sales, and then they take that money to then create and package that item up for people. In a service-based business where you have some knowledge or expertise, even if you're someone local who drove around your community and you were a handy person, well, there's basically going to be your truck and the items in the truck, whatever's inside the toolbox. That is a service-based business that you could do. You want to mow someone's grass, you get a lawnmower, and you can get started. You can recognize that in a service-based business, the costs are a lot lower. And I've even seen some where the costs are almost like nothing, where there are literally $1 million businesses where people pay $10 a month to have someone walk in your backyard and pick up your dog's poop. And these are multi-million-dollar businesses because people don't want to walk on poop, but they also don't want to go pick it up for their backyard. And so there is such a low barrier of entry in service-based businesses, and then you're able to match the prices with inflation. It really puts you in a very advantageous position to make sure that you're actually on the beneficial side of inflation. Because as I mentioned in the beginning, it's not that everyone loses and everyone wins. It's that in a certain position in an economy, I lose with inflation. In another position in an economy, I win with inflation. And we want to figure out, how do I shift my position to the winning position? Now, it's fair to say that everyone won't be excited by you increasing your prices, right? I'm not excited when I go out and the price of something I always bought is up, but it is fair to say that the price is tied to the value. And that even though there are some people that will be like, hey, this is impossible, I can't work with you anymore, there'll be other people who are able to say, this is worth it, and I'm going to start working with you. That both events are going to happen from the one decision of raising your prices. And that economically speaking, we recognize that as the price goes up, fewer people will buy that item. That fewer people will buy a MacBook, for example, versus those that will buy a normal PC. That there are more normal PCs in the world, but yet Apple is worth more as a company. So we recognize that I just need to make sure the economics of that decision works, that if I could serve one person for $100,000 or 10 people for $10,000 or 100 people for $1,000, I think a lot of us would say, well, I think I'd rather make it serving one person. If I'm going to do the same work, I think I'd rather do that serving one person. So we recognize that it's not a question of how many customers I have, because I do recognize that you probably don't want to be working sun up to sundown. So you do want to set a price that does, and it's going to make us feel uncomfortable, have some people say no, but you're also protecting your time for those that would say yes. The key is to build a business, even if it's a tiny side hustle, that solves a real problem and isn't tied to a complex supply chain. What are you good at? Is it graphic designing? Is it writing? Is it organizing closets, walking dogs? These service-based businesses are incredibly resilient because they let you turn your skills directly into an income that you can control. And that business can become your engine, generating cash that you can then pour back into your other assets, whether that is real estate, whether that is your business, whether that is our third and final asset, which is the stock market and investments. We're about to get to the third and final asset, which is how I supercharge my portfolio's growth. If you're getting value out of this and want to build your own financial fortress, do me a quick favor. Hit the like and subscribe button. It takes 2 seconds, helps the channel a ton, and make sure you don't miss out on what's next. Okay, so for many, we can have our foundation in real estate, and then we add the engine with your own personal business. The third asset is the accelerator. And for that, we're talking about the stock market. But, and this is super important, not just any stocks. While broad market index funds have historically outpaced inflation over the very long term, a more targeted approach can give you an edge during those short-term inflationary bursts when some sectors get hit hard. I needed to own companies that acted like my other assets, companies that could benefit from inflation. So what does an inflation-proof stock look like? I basically focused on 2 types. First, companies with serious pricing power. These are the dominant blue chip brands. And when I say blue chip, these are normally companies that have been around a long time. They own a large amount of the market sector, and they're just household names. And so when you have these blue chip brands that sell a lot of stuff that people buy no matter what the cost, think of the brands that you're loyal to. That's pricing power. These companies can pass their higher costs straight to us, the consumer, protecting their profits. Think sectors like consumer staples. People always need food, they always need toothpaste, and they always need medicine. The second category is companies that produce the raw materials of our economy. Those are the commodities. When inflation is raging, it's often because the prices of stuff like oil, gas, copper, and food are soaring. And by investing in the companies that pull this stuff out of the ground, you're investing in the source of inflation itself. I know, diabolical, I agree. And while the overall market might be a little volatile, a little choppy, energy and material sector often outperform during these times. My strategy was surgical. I stayed away from the speculative tech stars with no profits and companies that people cut back on first. We're talking about really R&D. If you have research and development, more times than not, that is the first sector that a company is going to cut from. Instead, I built a focused portfolio of businesses with unbreakable brands and those that produce essential raw materials. This portfolio was my accelerator. While real estate chugged along, providing stability, and businesses churned out cash, these specific stocks captured that explosive upside from inflationary trends. For those who want a less risky approach, government-backed securities like Treasury inflation-protected securities, those are TIPS, are also designed to protect your capital from inflation, though typically with a little bit lower of a return. So there you have it, 3 assets that I like to use when I'm building my inflation-proof empire. We use real estate, the stable foundation, giving you appreciating equity and rental income that rises with inflation. You have your own business, the cash flow engine. It gives you pricing power and an income you control. And then we have specific inflation-resistant stocks, and that's our accelerator, is letting you profit from the economic trends themselves. These 3 pillars don't just stand alone, they work together. You have cash from your business, and rentals funded more stock investments. Equity for real estate gives you collateral to expand your business. It's a self-reinforcing system, a financial fortress that doesn't just protect you from economic storms, but uses their energy to get stronger. The message here is about empowerment. Inflation isn't just some monster that we need to hide from. Inflation is a part of the overall economic cycle. It's a regular force of nature, and you can understand it, respect it, and harness it. You don't have to be a victim of the economy. You can decide right now to stop playing defense and start playing offense. You can start building your own empire, one asset at a time. Now I want to hear from you. Which of these 3 assets are you most excited to start with? Or maybe you're already on the path and have a story to share. Let me know down in the comments. I read every single one and would love to talk to you more about it down there. And if you want a deep dive on how to get started with your very first asset, check out the video on your screen now where I break down exactly how to find and analyze your first rental property. Thanks for watching, and as always, I'm Dre Griggs with Obsidian Wisdom, helping you to have more wisdom and less worry. Until next time, stay safe and enjoy life.